First and foremost, welcome to Forex Millionaires Club webinar. All right, my name is Yima Cheriku. I'm one of the mentors here. And this course is identifying market structure, right, on a short and a long-term aspect. All right. So if you guys have, anything to illustrate this information, like a notebook or something of that sort, that would be very helpful in this situation. All right. But you can replay the video as you like, just to get that reference that you need. All right. Just that what we're starting right now, identifying market structure. This is some of the basics when you first, start your trading day. You open your charts. You have to identify what type of structure that we're dealing with, right? Whether we have a downtrend or an uptrend. All right. And this goes for long and short term. You can use the same methodology for both all-time charts. All right. So what we'll do first is we'll get some blank screen on the charts. All right. And we'll just do illustration. And what we'll go over first is how the market moves from A to B, because as we are identifying structure, we need to know what the market has to do to get from A to B, right? And as you guys know, the market has corrections. So this will all, play in confluence with each other, all right? So what we have here, let me get my annotation tool, okay? So what we'll go over first is downtrends, all right? So if we had a market that was high in price, say we were here, this is point A, all right? And we were looking for the market to get to point B, all right? So the first thing the market will do is move down, of course, but it will move down in some sort of sequence, all right? And that's what we want to identify, and that's what we want to trade from to, take those shorts down to point B. Now, it's important to know how the market moves in general, right? So if we look at the market moving, we're looking at the market moving in impulses, corrections, and impulses. So essentially, you will have an impulse here from point A. You will have a correction from that impulse. You have another impulse. You have a correction from that impulse, another impulse. You have a correction from that impulse. Then you will experience another impulse, and now we're finally has reached point B, right? So what do we get from this current structure, right? We have certain supply levels the market has developed as it were creating this downward movement, right? So if we were to mark some of the supply levels that the market has developed, right? So let's get our line tool here. All right. Judging from, we have an impulse, we have a correction, we have another impulse. Where would the sellers be essentially? The sellers would be here, right? Because they brought that market down from that impulse, right? So we would mark all these levels where the market has finished the correction, right? So in total, we have 3 corrections. We have 3 supply levels, right? 3 supply levels, right? Now, we're looking at the market the same on each time frame, right? So you have to understand the scaling of the time frames, right? So if you're looking to take short-term opportunities, analyzing the day chart, the week chart, sometimes even the 4-hour chart, that might be too much of a high time frame for you to look for opportunities on a short term. So what would make sense, you would break the chart down to the smaller time frames, find the short-term trend accustomed to the long-term trend, right? So that's a whole nother conversation, is about the scaling. We want to get the structure down first, because, once you have the structure down, it really doesn't matter what time frame you're looking on, right? You can read it. So we have 3 supply levels that was made for us, right? So what we'll look for now is a correction back into our supply level, wouldn't we? So we will be looking for the market to make another correction, and we would get another movement to the downside, right? Creating another supply level. That is trading with the trend. That's why it's so important for us. Um, Whatever type of trader we are, long term, short term, we have to trade with the trend. Now, there are counter trend opportunities as well, but I, you know, advise you have a little bit more experience to trade the counter trends because, you're not trading with the trend, you're trading against it. All right. So, looking at these aspects on a downtrend, right? We have our first level here, second level here, third level here. And if we get that continuation from this continuation down, we have a level here. Now, within this downtrend, there are certain components that we also need to identify, right? And there's certain terminologies that you need to know, especially when you are absorbing another person's analysis. All right, so we have the part here, which would be the lower low within this downtrend, right? These parts here, lower low. And as you can see, this sequence down, right? Is when this impulse breaks this last lower low, it creates a new lower low, right? So once we have our supply levels, it's easy to say that we can mark these as our lower highs, right? Lower highs, right? So when you hear someone say it's in a downtrend, the market is creating lower lows and lower highs. This is exactly what they mean. The market is creating those supply levels as it's moving to the downside, right? Taking this illustration, and we will transfer this into the real-time chart, of course, but it's very, very important to know how the market moves in that aspect, all right? Now, let's get these lines off the chart and let's go over the uptrend, all right? One second, you guys. All right, now let's go over the uptrend, all right? So say we have a market very low, all right? We have point A here. We have point B here, right? Now, we're looking at it the same as we looked at the downtrend. So the initial move from point A would be a impulse. Look for a correction, another impulse, look for a correction, another impulse, look for a correction, another impulse, as now we have reached point B, right? So it's the same rules, same methodology, flip-flop from the downtrend, right? So as we mark our levels, we will be marking the levels at the end of the correction, right? So we have first level here, second level here, third level here, right? So as you guys can see, those are our supply levels within the uptrend, right? This point here, this point here, this point here, because that's basically an indication telling you where all the buyers are sitting at, are at these levels. The buyers took this market up at this price, right? So that is a level of significance in the market with whatever structure you're looking at, right? So we would look for another correction to follow this trend, and we would look for another opportunity to buy this market up within this uptrend, right? Creating another level for us here, right? So within this uptrend, same as the downtrend, we have terminologies as far as the components of this uptrend, all right? So the first component would be, these will be our higher highs, right? higher highs would be here. And it will be good for you to make an illustration, all right, as we are looking at the real time chart, right? Those points would be higher highs, right? Because the market made a higher high from this impulse after it has broken this level here, right? Same goes for every sequence within this uptrend to the upside, right? So these points here would be labeled higher lows, right? Higher lows. These are important terminologies that you need to know, especially when absorbing analysis from someone else, because I guarantee you they will be using these terminologies, right? Higher low here, right? So within this uptrend, we have certain components that we need to identify to confirm that it's an uptrend, right? And this is one way to do it. Very easy, very basic, very easy to understand, right? This is just the basics. Now, let's convert this methodology to the real-time chart, right? So as I put dollar index, we have this on the 4-hour chart, all right? Just giving you guys a reference on how the market moves in real time, right? Of course, the market is very more complex than our illustration, okay? I understand that, but we need to understand the basics of the structure first, right? So within this movement to the downside, right, we have an impulse from our highs, right? And as we're creating this downtrend, we have a correction, as I have in yellow. We have another impulse to the downside, right? We have another correction I have in yellow as well. Another impulse to the downside. We have this downward channel that we have developed here, but we have recently broken out of that channel, right? And we're trying to create an uptrend, right? Now, within this downtrend, we have certain supply levels. Call them resistance levels, right? Resistance levels. Now, we have all this room here to make a correction, right? But we need to get confirmation from this structure first before we predict any points on this chart that the market is going to reverse, right? So that is due with a break-in structure. That's another course, right, that we'll go over. Let's get the market structure down now, okay? So once we have market structure, we have points that we can work from, right? So as we break the market down, so within this sequence here, we want to know, okay, where does the market have to break for us to get the confirmation that it's going to go to the downside? And what confirmation do we need to see if the market is going to go to the upside, right? That's the big question that everyone wants to know, right? Now, with that question at hand, we need to know where our levels are, right? We need to know where our levels are, and we need to go back to the methodology that we just went over in the illustration, right? Now, beginning with the scaling, right? In order for us to know where those short-term levels are, we have to break the chart down to a smaller time frame. Now, in this situation, we don't, because as you guys can see from these lows, we have an impulse here, we have a correction here, we have another impulse to the upside here. So we have a higher high, we have a higher low that was made in the market, which would be our reference area, right? So we would be looking at the market to break this short-term structure with this movement down so we can get confirmation for this movement up to make another higher high, right? So we are making an uptrend at the moment, right? So if we don't get any break within this structure down, I mean, this small term structure, we'll have to break it down to the 5 or the 15-minute chart to see these levels within this downward trend, right? But we don't get any break within that, we'll probably go and break this green level, right? With a break of this green level confirms the continuation to break this low, right? But you have to keep in mind how the market moves from A to B, okay? So within that break, we'll have some type of correction to the upside before we get that next movement down, giving us impulse, correction, impulse, right? This will all to come together with time. It takes practice. Practice makes perfect, right? So within this sequence we have to the downside, just off the strength of we are in a downtrend on the 4-hour, we'll be looking for downside, but we need to have confirmation first. All right. Now let's look at an uptrend situation. Let's go over to the left, right? Let's look at an upward situation, right? So within this structure moving up here, right? Within this structure moving up here, we have higher lows and higher highs, right? We have higher lows, higher highs. Let's get a better example. 1 second, you guys. Let's get a better example for us. Get a clear uptrend. Okay. We'll use that point to that point, all right? Okay, here we go. Let's use from here to here, okay? How the market moves. If we put it from here, let's say this is point A, this is point B, right? So we have an impulse, we have a correction, we have another impulse, we have another correction, another impulse, another correction, impulse, right? That is the end of this uptrend. Now we have certain levels that was made within this uptrend, right? And I'm going to give you guys a reference on how the market breaks, give you guys a little teaser from this structure, all right? So we have an uptrend at this point, right? So we have higher lows, we have higher highs, which would be these points here, right? So what we'll be looking for now, as you guys can see, we got a test, a movement here. But when we pulled back, we don't have a continuation. We did not break this top here. You see this movement down that has broken these higher low levels. That is a break of structure. That is basically indicating to you that this trend is over, right? The market is reversing. It's just indications, confirmations that the market is giving you, right? That is no longer within this uptrend, all right? So as you guys can see this sequence, the market makes minor levels and major levels, right? We need to know the difference. The bigger corrections are the stronger levels, right? So if you see one of those stronger levels that is broken, that is probably a good indication that the market is reversing, right? Depending on what time frame you're looking at. And now we're looking on the day chart at this point. So that is a major break. So you will see a significant move to the downside from that break, right? And as you guys can see, we started to create a downtrend, right? We got impulse, correction, impulse, another correction into our levels. Boom, we got another impulse to the downside, right? The market reversed for us, another correction here. Just so you guys get a gist of the sequence the market makes, right? So you guys can anticipate certain moves, right? All right, that is the end of basic market structure. I hope you guys got a good idea on how to identify the market, right? Whether it's in an uptrend or a downtrend. I hope to see you guys soon, and I appreciate all you guys for watching. Take care.